So basically on this video, I'm going to be talking about these time frames 23, 21, 23, 21, right, in terms of the hourly time frame and also the minutes time frame. So these are like levels I use to pick out my zones. So let me just take that off. So for example, this is on the 23 hours on Euro USD. So we're able to actually see the clear ranges, right? So normally if we're trading impulse corrections like this, right, so you want to wait for price to come back into this range. Now most times if you're looking at this on a lower time frame, probably maybe the 4 hours or 3 hours time frame, right, you might be seeing a lot of candles. But if you want to get like the perfect zone, we want to leverage on the last bearish candle, right? So if you watch the previous video that talked about range theory, it gives you an understanding of what I mean by the last bearish candle. So if we look at this, we have this as the last bearish candle in this case, right? So this is my range. Now if I'm to zoom in on this, you'll be surprised that you're just seeing a very small candle, right? So that's like the last bearish candle to this week. Now if I do want to get like a more precise entry, I could then go to the 21 hours, right? 21 hours like this, and then what you see is that's a unique candle itself, which is this. So ideally I take 2 entries. I could do a 50% entry, and then also sometimes I could take my entry from the top, and then if I want to have like a higher risk to reward ratio, I will do 50%. So I will first take a trade on the first level. I would have taken a loss on that, so let's assume I'm taking 0.25%. Let's say every trade is 0.25% per trade, all right, and I'm targeting 10 hour per trade, right? So this simply means I would have taken a loss on the first one. So if I was to do this for 10 hour, this is going to be the take profit there, bro. 10 hour, we've taken a loss on that trade, but then again the second position will be running. Okay, second position will be at this level. I'm interested in looking for buys at the level here, 0.25% also 10 hour. That's 155 pips. All right, so this is what we have. And you see how market mitigates and then start pushing back to the upside. But then again, if you actually want to get more precise zone, we use the 23 minutes time frame. All right, so if I use the 23 minutes time frame and I go back to the base I've marked out, or the range I've marked out from the 23 hours and 21 hours, what I'm able to do is refine it totally to pick the last bearish momentum. So there are 2 levels here that I will be interested in. The first one will be this area, right, and that's because this is like the lowest point, and the market actually never got back to that area, so we see that. And then the second level I'll be interested in also will be this level here. Okay, so let me just mark that out, and then we'll look at both entries. So if I was to go back, you see that both entries actually got what activated. So we see this. Let me just take this off, then zooming in for a bit. We have a precise entry on the lower one, and then if you're taking the lower entry, your entry will be so unique, right? A 1 to 10 hour setup. Okay, so we have this. So coming back, you could also still go to 21 minutes time frame, and then on the 21 minutes time frame, we're still refining from the 23 hours 21 hours, like I said earlier on. We just want to understand the perfect zone to mark out in order not to miss our trade and our setup. So we have that marked, right? So ideally sometimes I could just take like the full zone here, right, this candle up to this level, just bring this back down, and we have the level marked out just like this. Perfect. All right, so this is my level where I'm interested in buys, and as always I want to take 50% of that level. So if I'm taking this first, taking it to this level, you see that actually our 10 hour setup plays out immediately. All right, you don't really have to wait so much, and that's 10 hour, that's 10 divided by 4, you get like I think 10 divided by 0.25, you should get 4%, right? 4%, because on 5 is gonna be 2%. all right, I just want to be sure because it's 10 divided by 4. Oh, sorry, supposed to be 2.5%, right? So if you rate 0.25, you get 2.5. You just multiply that, all right? So if you're also targeting this highs, that would have been more, right? That's like 16 to this level. It's about 21, but we don't want to be greedy. We just want to focus on the fixed hour setup. So coming back to the 23 hours time frame, and then just that's an example of this level. So if we're to look at another example, what we see here is this area here, right? So we have this level marked out our buffer range, and then where we're interested in looking for shorts is this area here. The price actually tap into that level yet? Of course not. Just as you can see, would have missed that setup, but that was precise. So we still want to look at the lower time frame to see if maybe there was a reason for us to take entry. And let's go to 23 hours. Now on the 23 minutes rather, sorry, what we see here is we have this range, and looking at the last bullish momentum before this short came into play, this area has actually been used before, right? This level got mitigated. If I'm to bring back this, you have that level mitigated. Let me just take off the yellow box. Then what we say is this like our last level for short entry. If we're still convinced the market is going to sell off, this is what we'll be looking to get in on the sell, and our level will be here, and would have actually missed this setup. All right, it's as simple as that. Would have missed the setup because price didn't really get to this level. So if we go back to 21 hours, you see that setup is missed. All right, price didn't get to that level. So you can always practice this even on lower time frame. Check it very well. Now you see that there are different levels the market would have mitigated. See this level here, price did not come back into it. Price mitigated this. That was like the last bearish candle, mitigated it. Same thing this area here. And ideally, if you also look at this level, this is a very valid level to watch out for price later on in the future to come back into, right? So I will still say I'm bearish on this pair for now. And yeah, pretty much that's it. I don't really want to like waste time on the video, so ensure you do subscribe, and then more importantly, you share the videos with your friends who also trade the forex market so they can tap in from the little knowledge I put out on YouTube. So that'll be all, guys.